Today, the Nigerian stock market suffers a massive 4.91 trillion loss. MTN unveils a 1 trillion expansion plan. Foreign investment into Nigeria's trade sector rises sharply, and soaring oil prices raises both opportunities and risks for the economy. First up, a bruising week on the trading floor. The Nigerian exchange, or the NGX, has recorded one of its deepest weekly declines of the year. In just the first trading week of June, investors watched approximately 4.91 trillion naira in the market capitalization vanish into thin air. This aggressive downturn was triggered by widespread profit taking as institutional and retail investors scrambled to lock in gains after months of blistering performance. Blue chip equities across banking, industrial, and consumer goods took the heaviest hits. While the sudden drop has raised red flags regarding short-term volatility, market analysts remain surprisingly calm. They maintain that this is a healthy correction, insisting that broader long-term outlook for the Nigerian market remains firmly positive. But while investors are pulling cash out of equities, one corporate giant is doubling down on nation's digital future. Telecommunication heavyweight MTN Nigeria has unveiled a massive 1 trillion naira investment plan slated for the remainder of this year. According to the company's executive, the massive capital injection will fund aggressive network expansion and critical infrastructure upgrades across the federation. The goal? To drastically improve service quality, eliminate drop zones, and keep pace with an insatiable domestic demand for high-speed data. As Nigeria's digital economy rapidly matures, millions of citizens are migrating online for daily commerce, education, and banking. Industry observers note that this 1 trillion naira bet could serve as a vital backbone for the wider economy, potential offsetting some of the macroeconomic headwinds currently facing the country. And that telecom bet aligns perfectly with a broader trend we are tracking today. International capital is officially knocking on Nigerians' door once again. New data reveals that Nigeria's trade sector successfully attracted $65.79 million in foreign direct investment during the first quarter of 2026. This represents a sharp, significant spike compared to previous quarters. Top economists note that this influx reflects a resilient wave of investor confidence, particularly in targeted sectors of the economy. What makes this impressive is the backdrop. This capital is inflowing despite persistent, well-documented anxieties over inflation, foreign exchange pressures, and ongoing infrastructural deficits. The injection is expected to provide much-needed liquidity, support commercial activity, and could pave the way for even greater foreign participation later this year. Global energy markets are on high alert today as oil prices climb sharply following a dangerous escalation tension in the Middle East. Brent crude has surged to nearly $98 per barrel on the heels of fresh military exchange between Iran and Israel. The escalation has ignited severe fears of prolonged disruptions to critical global supply lines. And for Nigeria as Africa's prominent oil producer, this price spike is a double-edged sword. On one hand, it promises a substantial boost to exports and much-needed government revenue. And on the other hand, analysts warn that sustained high crude prices will inevitably drive global energy costs, threatening to import a fresh wave of inflationary pressure direct back into the domestic economy. And that is your business news update for now.